Yeah, no, I think that you're right that the market is giving us a couple of different messages. I'd say that there has been some stock market volatility, but I think that the most important thing that's coming out of this blue sweep, as you say, is really the sell-off in U.S. Treasury bonds, where the yield is up about 10 basis points. It's at new highs since early last year, and it's serving to drag up other yields, like in Europe and other countries in Asia, drag those yields higher. And so I think that's probably the biggest takeaway from today. Of course, we've got the volatility of the stock market, and it seems to be that what people are anticipating is a bigger stimulus package. And so you see a greater breadth in the stock market. So, for example, the Dow Jones Industrials is outperforming the Nasdaq, the high-tech intensive Nasdaq. I think that the technology, a lot of these technology companies are still reinventing themselves. You think about how important cloud business services is to, say, an Alphabet or an Apple, and they're redefining themselves. And that's one of the interesting themes, I think. Both Baidu in China and Apple in the US are talking about getting in the car manufacturing business. Because what is it? What's a smart car really going to be? It's going to be like a computer on wheels. And so I think that that's what I mean by the technology companies keep reinventing themselves. But of course, the people, the benefit of being at home and watching Roku or Netflix, I think that what we're going to see is that there's been maybe a semi-permanent change in behavior, how people want to consume, and a lot more comfort level about buying things over the internet. This is, I think, what separates the retail and institutional way of thinking about the markets. The retail will see it in today's newspaper or hear it on the news that the Democrats won, and they'll go out and invest accordingly. What institutional investors will do, because they have deeper pockets and because they're managing other people's money, they might take the wager first. They might first bet that the Democrats are going to win, because that's what the polls seem to be suggesting. And so then when the retail comes in, the institutions can take their profits. We saw that yesterday, actually, when the Dow Jones was down over 500 points, and it came back, and more so today. And so I think that I'd always encourage people two things, I think. One is being a value investor. That is, do your homework and buy something that you think is below fair value. So it doesn't rely on a greater fool theory. It relies on some asset just returning to fair value. And the second thing is, what I find helpful is it's not so much about being right, guessing which industries work or which one won't work, but how you it's really the discipline of being able to cut your losers, admit that you're wrong, keep the losing positions low losses, small losses, and the profits will take care of themselves. That's why the markets are a lot about psychology. Often we think it's like analysts like me try to talk about prices or macros, but it's often just mastering our own our own impulses, and those impulses like fear and greed. And so I think that the markets are treacherous. They can move quickly for no apparent reason, and so it makes sense then to hold on to something that has value. That's like the keystone, and that's their compass. And but I do think that with the Democrats seeming to win, but the key really is that ideally they'd have 60 votes in the Senate, which they don't, which it'll just be a tie, and so the vice president casts a deciding vote. So it'll still hamper an aggressive Democratic package or program. But I think that what Biden has shown us through his recent speeches, through his appointments, is that he's going to govern from the middle. He's not part of the very far left of the party. He's not a sort of a Republican hidden in Democratic clothes, but he's sort of a moderate. And I think that we'll see different types of coalitions form with different Republicans just to get some things done in the country. I'd say that I want to make a distinction between the Bitcoin and the blockchain, because you're right that this past week, the controller of the U.S. currency agreed that federally chartered U.S. banks and lending institutions can use blockchain and stable coin. And so I think you're right that the blockchain is moving more mainstream. Bitcoin itself, or Ethereum, which is also actually outperforming Bitcoin in the past month, up over 100%. I don't know what to make of it as an economist type, as a strategist. Of course, it's momentum, but is there a real underlying value to it? I don't really think so. In the sense that it's nice. I mean, I kind of think of it like trees. If I understand it right from my green friends, trees are incredible carbon traps. You grow a tree, and that wood is partly produced by it sucking in the carbon. And if I'm right, there's too much savings in the world. And they're driving down interest rates, so we have like $16 trillion of bonds that have negative yields. We have incredibly low yields elsewhere in the world. We have asset prices like PE ratios in the stock market at very lofty levels. US is near records. South African stock markets at near record levels. The Japanese stock market's near 20-year highs. And so if the Bitcoin and cyber currencies were not there, that money that's invested in them, which is roughly speaking, say $750 billion, would be out chasing bond yields even lower, forcing equity markets even higher, having redundant investment in plant and equipment. So I wonder if the cyber currencies aren't part of this savings trap. Instead of trees being a carbon trap, you have a savings trap, something to take away the capital from doing irresponsible things like driving interest rates below zero. Or a year ago, we were talking about oil prices being below zero. We've got to get that money out of those kinds of markets and put it someplace else where it can't do any damage.